How's it going out there? It's February 23rd. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. So Thursday's usually reserved for interviews. Took a little bit of break today, running around. Got some great interviews set up over the next couple of weeks. Really, really great interviews. I'll leave you in suspense for now. One of your favorite, someone who hasn't been on for a year, who made one of the best calls ever to really go all in on energy. Those of you who listen to podcasts probably know who that person is, and very, very popular on social media these days. Building a great following, and a guy that I like a lot. But today's podcast is going to be educational, and it may be one of the best lessons you could learn. So I want you to pay attention. And I'm not going to bore you and say, this is what you should do all the time, or whatever. I just want to try to explain the markets to you. And what you're going to see today is something that some of the most brilliant, smartest people in the world that I respect got wrong. Okay, so this isn't, something that you should always do and this works out. And, again, a lot of people like to pat themselves on the back. It's not that. It's not even that I'm ripping these people apart, because I'm not. Because I have a lot of respect for them. And following some of these people have made me a lot of money, right? But this one, a little different. So I want to talk about a company, and if you are a Curzio Venture Opportunities subscriber, you should be familiar with it. It's Kodiak Sciences, KOD. Has a lead product candidate called KSI 301. I'll get too technical with you, but it had very positive phase 1, phase 2 results for its drug to treat wet age-related macular degeneration, right? That's AMD. So AMD is a leading cause of blindness in people over 60. Around 11 million individuals suffer from some form of this, with about 10% having a severe form known as wet AMD, WAMD. So the main AMD drugs available is Eylea and Lucentis, and they bring over $11 billion in sales. So we're talking about $11 billion in sales, a huge market, especially if you only have 2 drugs, right? But there's a problem with these 2 drugs. They're a little bit flawed. Now, Kodiak came along, and their new drug received phase 2 approval. Is about mid-2020. It was phase 1 and getting into phase 2 approval. The results showed that its drug was much better than the alternatives, which actually includes eye injections every 8 weeks. Those hurt a little bit and are very uncomfortable every 8 weeks. So Kodiak, their drug, included much better results, showing patients only required 3 injections, or just a few injections, every 6 months. That's a big difference, right? From 2 months to 6 months. Not only that, safety, efficacy data was incredibly positive. So everybody was on board this thing going, holy shit, these guys are going to take over this market, control this market. They have an amazing drug, and all the analysts were extremely bullish on it. So the trials are so good and better, this drug showed better in almost every single everything that you would look at. It was just much better than the alternatives. The analysts are forecasting between $3 billion and $9 billion in peak sales around 2030, starting around 2026, 2027. So I know all of this because we recommended this thing in Curzio Venture Opportunities, and this was in September 2020. And I bought a half position in September 2020 because it was on the heels of the Baker brothers, who I did very well with. And it's someone that I followed for the last 10 years. These guys, I would say they're the Warren Buffett of biotech, but they're probably, I wouldn't be doing them justice by saying that, believe it or not, even though as much as a legend. I mean, these guys are right. These guys are right, and they're right all the time. They're right. It's kind of like Renaissance, right? Who had like 3 losing periods in the last 15 years, right? I know that's front running the market and shit like that. Nobody cares, but these guys are right all the time. And it's true that a lot of people get it wrong because, it's a dangerous market. You don't know how studies are going to go, and sometimes expectations go either way. But the Baker brothers, I mean, they was it over $30 billion in assets under management in biotech. Think how big that is. That's how big they are. These guys are great, right? So I recommend this stock. I really did a lot of research into it. Our cost base was 53. The Baker brothers started buying a lot higher, and it did pull back. And we wind up selling it in May 2021 for a 56% gain, which is disappointing because that stock, we recommended 53, was well over 100. I think it had like 140, 150, and I think we sold it around 80-something. But I sold it because insiders started to sell a little bit, reduced their positions. They sold some of their positions. That included the Baker brothers, sold a little bit of their position. Obviously, they added to their position, though, after that, which I'll explain in a minute, but they sold it then. But also their key study, their phase 3 study on that drug, they said that they were going to delay it for a little while. And when you delay something, you provide uncertainty in a market. In biotech, I'm like, this stock's going to go really nowhere for a while. And it kind of did, right? So we got out of it. And I watch it. I watch the stock really go from 80 to 70, 60 to 50. You know, I was trading recently at a little bit above $50, which is crazy because if you look at the high of the year, it was not even a year. If you go back to November, it was $125 in November. And just the other day, it was trading at 50. And that may sound surprising because of how much expectations were. But this is the reason why I was saying I've seen so many amazing ideas in biotech because, you know, this is a stock that looked really, really good that people loved it. You know, we liked it at this price before. I wasn't going to recommend it or anything, but, you know, I was just keeping an eye on it. But the reason why the stock got crushed is because most biotechs got destroyed since November. It's one of the most hardest hit sectors outside of SPACs and stuff like that. So, you know, it just got murdered. But expectations were still incredibly high. You had Kodiak going through that phase 3 trial. The drug could literally take probably 60, 70% market share, maybe even more, of an $11 billion market. That's why they're forecasting peak sales of $9 billion and somewhat conservative at $3 billion. But, you know, whatever, that's, do the math. You know, 80% plus of the market. So you had 10 analysts covering only one sell. Now, Goldman Sachs had a $70 target on it, and the stock was, you know, a little bit over 50. And they came out, they initiated with this, right? And initiated and said, oh, this is a neutral rating, $70 target with the stock trading around 50, 55. But they initiated on Kodiak on February 11th, right? So we're talking about not too long ago, a couple weeks ago. JP Morgan put out a recent note reiterating its $124 target on the stock. Jefferies had a $150 target. The average price from these analysts was $121. Also, in January, this year, late January, Kodiak director, who's the Baker Brothers advisor, his name is Felix Baker, 10% owner, purchased 347,000 plus shares through different transactions for around a price of $53 where it's trading right now, right? So that was 3 weeks ago. If you do the math on that, that's an $18 million buy. That's a massive, massive buy by a director. A massive buy, $18 million, right? So Baker Brothers, best in biotech, who now accumulated a 31% stake in Kodiak, which in total, that stake increased by 8% since last quarter. And BlackRock, who's pretty big, trillions in assets, also increased its percentage by 9% last quarter on this stock. And so it come down and said, here's a great opportunity. Yesterday, the company announced its phase 3 trial results, and they absolutely bombed. They did not meet the primary endpoint. Most patients saw higher inflammation. That's a Freudian slip because I say inflation all the time. Higher inflammation, and 30% needed more dosing, frequent dosing. The stock yesterday was down 80% to $10. Okay, the average target price, again, on this thing was $121 going into that. All right, so the stock was $130 in November. This position turned out to be at peak around $2 billion plus for Baker Brothers, around there. Assuming they had that 31% stake, which was, I think, close to where it is. But $2 billion, and now that stake is worth, what, $160 million? The Baker Brothers, very big, over $30 billion in asset under management. This is their fourth largest position, and again, they don't get much wrong. Almost never get it wrong. I followed them into 3 other positions, including this one, and did fantastic. And Kodiak, when we recommended it, immediately from 50 to like 125, and it was like a couple months. We only had a half position because we didn't even get a chance to buy the other half position. One of those stocks that, hey, it just took off, and I'm okay with that. I'd rather that than not owning it and waiting, right? So you could wait and say, well, I want to wait for it to come in, or own a half. And the worst case scenario, it goes higher, you own it, and if it does come down and comes in, you could buy the other half and lower your cost basis, right? It's kind of what we do in some of our newsletters. It just makes sense. You never know when the bottom is going to be in, and you want to scale into some of these positions. Stock just immediately took off for us. So now it's gotten absolutely crushed. And there's an important lesson here that you need to learn. That will make you a great investor. And it will help you not only make money, but prevent you from getting wrecked. And I'm not here to rage against these analysts, and they're all on the wrong side. Listen, the data was great. The data was fantastic. In phase 1, phase 2, it made sense compared to the other drugs. Everything checked every single box. And really, this was almost as certain as a guarantee that I saw. That's why I love the stock, and I recommended it last time. But just the phase 3 trial was pushed out. I'm like, we're going to be sitting this thing. It's going to trade sideways for a while. And it did, and then, went higher and then came back in. But the lesson here is the expectations. So everyone, and I mean everyone familiar with this drug, analysts, doctors, insiders, hedge funds, thought this drug would easily get phase 3 approval. Everyone. companies were modeling before they received phase 3 approval, before they could sell the drug and get the full approval. They were modeling for $5 to $9 billion peak sales. I think one company had $3 billion, but around $6 billion was the average in peak sales for this. And only one analyst had a sell rating, which they're undisclosed, which means they're probably a very, very small fund. Because, I have access to Goldman and JP Morgan, Jefferies, all these reports. They didn't have a name on it, so it's probably a small boutique firm. But even with that sell rating, the guy had a $50 target, so expectations were kind of high as well, since that's where the stock was trading just before the news hit. He should have a neutral rating on it. Now, I explained how expectations work on Tuesday. Since there's a ton of risks in the market, and I'm looking at the market too, and I love when I can, this is why when I look at things, and I don't care what side you're on, a political aisle or whatever, for me, if the data changes, I change immediately. And I was leaning bearish. I'm like, wow, just there's so many risks in the marketplace. I saw amazing opportunities in small caps. I've said, listen, one of the great buying opportunities, not in the Russell, not buying the Russell, but just there's so many names that are down 40, 50, 60% from their highs that don't deserve to be down that much. They have strong balance sheets that are, just great right sectors. The earnings, they reported the last 2 quarters were great. They raised earnings expectations. Now they're cheaper than ever, down 20, 25, 30%. And, a lot of great buys here. But if you're looking at the macro point and you're looking at what's going on in the markets, what do you have? UK, Russia, which is all over the place. Are they invading? Are they not? What's the definition of invasion? Is it an invasion? Who knows, right? We just know that we're being told to hate Putin and they're a threat to the world, while China is perfectly okay and they're not a threat to the world at all, even though they killed millions of people, right? With COVID and genocide and all this shit and how terrible they are in CL technology, we'll always deal with them because we do business with China. We don't do business with Russia. Right? So that's why we're very, very nice to China, even though China is a much bigger threat than Russia. Much bigger threat than Russia to us, right? And to the world. That's okay. But it's all about money, right? Everything revolves around money. That's okay. So you got UK-Russia fight. You got the Fed tightening, which who the hell knows how much they're going to tighten, because it was 3 rate hikes going predicted in November. December was 4. Then they went up to 6. Now, just a couple months later, again, since November, you have JP Morgan saying there's going to be 9, which we talked about, Daniel and I, yesterday. 9 rate hikes. So no one knows what the hell is going on. No one knows how much they're going to raise. We all know they're behind the curve. But inflation hasn't slowed. It doesn't slow. It might be 9. It could be more. I mean, you need inflation to slow, and we're not seeing that. It doesn't help with the Russia crisis and Ukraine because oil prices are going higher, and we have higher oil prices. That results in almost every single company. That impacts every company, every family, and prices. What? To make up the difference, you're going to raise prices even higher, right? So they look good. Then you talk about peak earnings. We just came back from COVID. A ton of money flooded into the system. Now it's going to be less leverage. Rates are going higher. It's not as easy to borrow money. The 10-year higher. Mortgage rates are much higher. Still relatively low historically, but much higher. I mean, I just closed on my house. Closed my house yesterday. I was lucky 4 months ago. It's 4 or 5 months this process took, which is a joke. It was a construction loan, but I closed at 3.25, and I think pretty sure they're over 4% now. It's a big difference. Especially with my house. I'm buying a $60 million house. I'm kidding. I wish. Need a couple more of you to buy some more subscriptions for that. But it's a significant difference, no matter how much the price of your house costs. Then you have inflation just out of control everywhere. Commodities everywhere. Inflation continues to be out of control. And again, higher energy prices on the horizon, which that may lead to even higher inflation and higher energy price on the horizon because, massive cutbacks, not as much drilling, and also because of UK, Russia, and they think turning off a pipeline is good news, right? They think they're punishing Russia, who's one of the largest, if not the largest, right? Now they're the largest energy producer in the world, just surpassed us. It's like 12 million barrels a day, whatever it is. So higher energy prices is great for them. They have a surplus. That's awesome. So you're going to shut it off, which creates higher inflation for the rest of the world. That's punishing Russia. Not to mention Europe, Germany, who's shutting that pipeline off. I mean, Europe receives 40% of the natural gas supplies from Russia, right? So, it's just funny how all this works, but where is it going to go? Who knows? But look at all the risk in the marketplace. What are the positives? Not a lot of positives, not crazy. But you know what? I read a piece, which was really, really good, that made a lot of sense. And I brought it up to you guys, and I brought it up to this was on Tuesday's podcast, where if you're looking at CTA exposure across, all sectors, and CTA stands for Commodity Trading Advisors. So these are the biggest investors of funds that trade futures and options, and, where they lean on each side is a pretty big deal. Again, we're talking about expectations. This is the lesson I'm going to try to teach you guys. So CTA exposure across all asset classes, right? The start of the year, just equities. When I say all asset classes, equities, bonds, forex, gold, oil, copper, everything. But equities in general, these funds were 40% long equity. This is the start of the year. We're only in February. Today, that's negative. It's negative, around negative 8%. That means they have a short position. And it's big. The last time it was at this level was June 2020. And what happened then? The markets really took off. But you see, and when you look at the chart, and if you want to follow along on Curzio Research YouTube page, I'll show this again. And you're looking at that almost every time this line has come down to, it's like negative 8, close to negative 10, we've seen the markets rebound tremendously. Why? Because all these funds are leading short to the point that their overall exposure, not just equity, so equities, bonds, forex, gold, oil, and gold, and copper, is their long exposure just 28%. Throwing a lot of numbers at you, but hear me out. At 28% net long exposure, that's the lowest since 2010. And what happened since then? The markets had one of the biggest roars that we've ever seen, right? The biggest bull markets probably in 30 years, about 30 years. So I provided this chart. I think it was to Curzio Venture Opportunities. I don't know if I put this chart up for, which is one of our most expensive products, but I don't know if I put this chart up on Tuesday, but I just talked about it a little bit. But now you saw it, and I put some notes on the bottom of it. Again, that's on a Curzio Research YouTube page. But again, I know most of you listen to this to iTunes, and I'll explain it to you. The point is that 20% net exposure, lowest since 2010, and you're looking at what happened. The markets absolutely surged. And when they surged, what did these guys have to do? They all had to cover their positions, and you're seeing the market absolutely take off. So when you're looking at all these risks now, even smart money, again, is leaning really hard in one direction, and that's shorting the markets, betting for a bigger downturn. That's where we are right now. And that's usually a contrarian indicator. Because when we look at Kodiak, they were leaning the other way. Positive, extremely, extremely positive, which explains why the stock's down 80% in a day to $10, even though they have around $13 in net cash on their balance sheet, as everyone is selling the stock at the same time. That doesn't mean you should go buy because it has $13 a share in cash and it's $10 because that's right now. And they're going to continue to use up that cash, and maybe they have further studies, and that cash position could go down to $8-7 in 6 months from now. But right now, it's $13 in net cash. Not the reason that you should just go in and buy it, because the number one drug to target the biggest market just received very bad results. And those results, I've seen results come in, and they question them and say, okay, well, you know what? We need more. This wasn't, we need more. This was like, this ain't going to work. This was almost as negative as you can get. And they have other applications for small markets, and maybe they do better in there, but it was just nothing. Like safety, efficacy was off. It was just, they required more dosage. It didn't mean anything. Inflammation and pain, they didn't expect any of that. None of that showed up in phase 1, phase 2. But now what happened? Everyone caught on one side, selling at the same time. And you see the stock crash. How often do you see a stock crash 80% in one day? That only happens if everyone's leaning to one side. Now, let's flip that. Because all we need to see is just a small positive where maybe inflation moderates or tensions in Russia, UK ease. Or the Fed says, hey, you know what? We're not going to be as aggressive when we tighten. Or maybe oil prices fall 20% from these levels, which result in inflation moderating a bit. If that happens, every one of these fund managers are going to rush to cover their shorts. So you're not going to see the market rebound like 2-3%. You could see it pop 5-7%. And it could happen in a week and a half. Because that's how short they are. This is unprecedented. I wouldn't say unprecedented, but this happens rare. It's not often when they're this net short everyone, to the point where BlackRock just came out yesterday and said, hey, we're adding to our positions now. We think there's incredible opportunities. So when we're talking about all these risks, it usually means that they're priced in. And yes, there's a lot of them. And yes, you can't see too many positives other than there are companies that have pricing power, but there's companies getting it done. Google, Apple got it done. AMD got it done. And that's technology where a lot of technology stocks are getting nailed. The reopen trades, look at those numbers that they posted. Look at the oil companies. They don't have to do anything, and they're getting it done. Just oil prices are going higher and higher. And Pioneer just hit an all-time high. Not a 10-year high or 8-year high, or last time oil prices were over 100. So there's things that are working, and a lot of names are down that don't deserve to be down. But when I see something like this, expectations are such a big deal when it comes to stocks. And that's why you saw during COVID, when COVID absolutely crashed, expectations were low. You could have bought almost anything in April and you would have made 200, 300, 400%. Outside of maybe Boeing or, a couple of companies as he went up 100%, not 100% from its low. I think it went down to 90 and then to 140, 150, or whatever it went. But a lot of these companies that got destroyed, that's the opportunity. And you get that opportunity if you're a smart investor and you're hedging yourself, which is why I was pushing that product, which is Money Flow Trader with Ginia, which a lot of people didn't take us up on, which is cool. That's okay. I'm just telling you. That's how the professionals invest, because when the market crashes, most people get destroyed. And instead of getting destroyed like you did in COVID and going, holy shit, maybe if I hold on, and you did okay. A lot of people sold. But imagine if you made money and your portfolio was, say, $50,000 and you had puts. So your long positions got wrecked, but those puts just took off. And say if your portfolio went from 50,000 to like 55, 60,000. Now you're sitting at the bottom of a market, one of the best buying opportunities, while everyone's like selling, running to the exits, screaming fire, and you're buying shit at the ultimate cheap price. That's how you make a fortune. You want to be buying when nobody wants to buy. I recommended a coal company. I'm like, holy shit, man. These guys got to go into earnings. Everything that I looked at said they're going to blow out the freaking earnings. I'm like, watch them not blow out the earnings. Let me just take a half position. They blew out the numbers. But me being nervous, I like that because everyone's nervous about coal companies. I won't give you the name, but you know what name that is. Was it Curzio Research Advisory or CVO? One of those, I forget. It's recommending stocks here and there. I've been busy, but if you're subscribed to the newsletters, you know which name I'm talking about. But you have to pay attention to that, because what happens is when things are the most exciting, everybody's talking about it. It's awesome. That's when you should be selling, because usually everybody's in already. Especially when you have cab drivers and your teenagers and your friends across the street and your neighbors. You're not in this stock. You didn't buy this. Notice how notice the negative stories coming out on Bitcoin right now. And Bitcoin rebounded a little bit, fell that back below 40 and rebounded a little. But notice the stories. 3 or 4 on CNBC, all negative. Some guy that owns a big brokerage firm in crypto says, well, the last 2 bull markets came around halving, and the last 2 halves, that's when really, it's that basic? That's what you think? So if, every fund is like pouring money into Bitcoin, like that's going to hold up? That's your thesis? There's a person that knows Bitcoin. He doesn't know the markets, how things trade. But you're seeing all these negative stories. This person thinks Bitcoin is done and it's going to get it. That's when you want to be buying things. I know it's hard. When you're buying shit and you're nervous and you're like, man, I think this is going to be a mistake. That's when you know you nailed it. That's when you know you nailed it. Because when you're buying something and you're that confident and everything you read is positive, 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 you better worry. Just take a step back. You could be right, but just take a little bit of step back and be like, okay, what am I missing here? Because every single data point I see is positive. And you cannot tell me there's not one stock where you should see every single thing. Management team's great. They're in the right industry. Sales starting to explode. Earnings starting to explode. They just took over the right companies. Just hire the right people. No. Not every company's perfect. You got to be able to find those risks. That's why for me, I love reading the other side all the time. That's going to make you work harder to make sure your thesis is right. And a lot of people don't want to hear it, especially in today's world. You can't disagree with anyone without people getting pissed off. And I got so many emails on Ukraine, and man, they were structured. They were detailed. Frank, I don't think you know understand Ukraine and Russia and how, but they were structured. And I said, you know what? Thanks a lot. I said, and here's what I think, though. And even the piece of that I'm showing you guys that a good friend of mine, a good analyst, sent to me. For me, I'm like, man, there's so many risks in the marketplace. What's the catalyst here? That's the catalyst. Everybody's short. Oh, and when I say everybody, I say the big money is really, really short. So if they're all leaning to one side, how much short could they go? Could we fall further from here? Yes. But if we have one, just everything is so freaking negative. We have one little positive move here. This market's going to absolutely take off because all these big multi-billion-dollar hedge funds are going to have to cover the shorts at the same time. And that's why you saw the market fall so fast, because they went from 40% long exposure in equities to negative in 2 months. And a lot of these guys follow each other. Algorithms follow each other. I can't say how many newsletters say we follow the smart money, and you follow. I said this must be the Nigerian brothers and option activity and following option activity, and so you see that a lot. And some people have different systems, and we have one that's really, really great. But, with the options point, everybody can see those options and where they're going. But I can't tell you how many newsletters will launch, how many people have that strategy now to say, eventually you're all looking at the same thing, which means what? Which means someone is going to manipulate that to make a ton of money off of it. And make you think that, hey, you know what? I'm going to spend $50 million to make all these people write to hundreds of millions of people that think we're bullish on this thing, and I'm going to be shorting the shit out of it someplace where you can't really come up. It's not going to come up on any Bloomberg systems. Believe me, this shit happens. These guys are smart. Very, very, very smart and have connections in the highest places. That's why the Fed governors are able to trade positions as they're making policy. Politicians were able to do the same thing. Lobbying, knowing what's coming out and being aggressive. I mean, come on, that's the system. That's what you're going into. That's what you're up against as an investor. So when you're seeing the expectations, guys, when you see those expectations lean into one side, be careful. You always want to be on that side that nobody's talking about, that everyone's like, you're full of shit. You have no idea what you're talking about. Like with COVID, with so many different things. And for me, I take pride in that. I take pride being able to come back after visiting every shale area saying, guys, this whole fracking shit is a fucking hoax. This doesn't cause water contamination. Everyone's saying, you're crazy, this and that. I'm like, well, okay, you know what? Do me a favor. You go to every shale area. You go into 50 different counties within Texas. You go to North Dakota when it's freezing, hop on these rigs, talk to these people, and then come back to me. Don't fucking tell me what you just read from some idiot who has a bias. Go and do the research yourself. Get your ass out there, because that's how you make a fortune. I can't tell you how much money I made on oil stocks because everyone was betting against them, saying fracking's going to disappear and it's gone. What are you talking? It causes earthquakes. Animals are dying. You turn your faucet on, you light it on fire. It's crazy. It's all bullshit. It's such bullshit. That's how you make money. Not by being on the side that everybody's talking about. That's why I started researching Ukraine so much. I'm like, why does everybody hate Russia? There's not one negative thing on Ukraine. Why? I started realizing they're one of the most corrupt nations in the world. And why are we defending these people so much? Why? They want to get into NATO. They're not going to get into NATO. Why? Yes, there is worry about them taking over Ukraine again and whatever, but it's pretty clear that Russia said, look, just don't mess around with Crimea and don't go near NATO and you're good. And they did the opposite. So, that's their problem. Is it our problem? Should we be policing the world? Should we be telling Germany if it's okay that Russia builds a pipeline directly into Germany? Should we be like, why is that our concern? Why do we need an approval for that? Who the hell do we think we are in the U.S.? That's something that's going to be great where you don't have to worry about Ukraine or tensions or Poland. It goes directly to Germany, which is, I would say most powerful nation in Europe. From Russia, gives them good ties, gives them cheap energy directly to them. That's a good thing for both of those nations, I think. Why the hell are we policing that for? Who the hell do we think we are? We do hardly any business with Russia other than sell them soda and cigarettes. That's it. We do nothing with them. But yet, you look at China, everything's okay with China. Don't say anything bad. If you say something bad about China, what happens? Remember when you said, if you went on social media 9 months ago, and you said that COVID started in Wuhan, it was originated in a Wuhan lab, you got thrown off social media. You get thrown off social media for that. Think about that. Think about the connections that China has to have to the biggest companies that we have in the United States to actually get that done. That people are reporting facts, and our social media companies are throwing us offline, off their platforms for telling the truth. And this is from sources, from people and whistleblowers that were there, that were interviewed, that have no bias, that lost their lives to be interviewed, that tell you, hey, I worked there. This is what happened with that girl. It doesn't matter. Think about that shit for a minute. When it comes to this stuff, guys, if you want to be a good analyst, if you really want to make money, if you want to make a fortune, it's being a contrarian. Don't do what everyone else does, especially in this market. You could have did that in technology for the last 10 years and say, okay, I'm buying what everybody likes in technology, and yes, it did well. It's different now. The Fed's raising rates, and they're going to raise rates aggressively. It's going to be here. They're going to be raising rates. They're going to take a ton of leverage out of this market, which is trillions that was ejected due to COVID. It was a fucked up time. It's all messed up. We're seeing a lot of crazy stuff. We're going to see the consequences of just injecting a massive amount of money into the market without even worrying and saying, we've done this how many times now since 2008? And it worked out where stocks keep going higher, so let's just print more money. Now you're seeing it affects what happens. These are the consequences. Those too big to fail banks. Remember those too big to fail banks? This is when everything was created, right? For 2009. And just how do we make these banks so they're not too big to fail? Look where they are now. Those measures in place. Think about that. Those measures in place were supposed to make the JP Morgan's, Wells Fargo's, Bank of America smaller. And what did it do? They're 2x to 4x bigger today, and definitely too big to fail today. But why were these measures put in place? There's a lot of bullshit surrounding the markets. I think people are sick of it. They're sick of the politics. They're sick of everything. But use that to your advantage. I mean, we saw with Kodiak, everyone leaning to one side, and look what happens. I mean, what was the upside of this thing? If it's trading at 125, what's the upside of it? Because you're assuming everything's absolutely perfect. That this drug's going to get approved, and those sales are going to be $9 billion or $8 billion or $7 billion in sales, peak sales for Kodiak's drug. But on the flip side, look what happens. That's when you see an 80% correction. It means everyone was leaning to one side. That's when you see a market absolutely correct, because they were very, very bullish, and now they sold everything at the same time, but now they're on the opposite end of the spectrum. So we just need a little bit of positive news, and you're going to see stocks, and even those names that sold off, that you saw that had great earnings last 2 quarters, and they're down 20, 25% from their highs, those things are going to hit new highs, and they're going to rocket higher. They're going to surge from these levels, and those are some of the names that we're putting in our portfolios right now. Do you have questions and comments, guys? Hopefully that helped. Went a little bit longer than expected. I try to educate you as much as I can. Again, from lessons that I've learned, from me getting my ass kicked. Like, that's why I love this. I love what I do, because it's like golf. You can never perfect it. If you shoot a 59, you're pissed you didn't shoot a 58. And you worry about the shot you missed. In this, whenever you get an ego and you think you're great, it slaps you right in the face. And for me, being as competitive as I am, I love that, because there's always something to learn, and you're learning constantly different industries, the way the markets work. You're building up your contacts. You're learning from more and more people. And then you start realizing, holy shit, man, there's a lot of smart people out there. And the people I interview, in your 30s, you think you're the smartest guy in the world. When you hit 40, 45 and start really talking, I just talked to one of the founders of one of the biggest power companies in the world, and steel companies in the world. You realize that, wow, you're not as smart as you think, man. There's a lot of brilliant people out there. There really are. So learn from them. And don't do what everyone else is doing. That's usually a sign, indication that you're going to see disaster. I mean, that's the best lesson I can teach you. It's the best advice I can give you, because I've seen that in the past as well. When everyone's on one side, everything looks good. It's better to be on the other side. And plus, when you're on the other side, especially for stock or industry everybody hates, you're getting in super, super, super cheap. Oil was trading negative how long ago? How long ago, right? Nobody wanted it. Now it's $100 or closing in $100. Right? And now everybody wants to buy it at $100. What does that tell you? It probably tells you that it's topping out. Maybe it goes a little higher. All the indications point out. You're not going to find anyone. I don't think you'll find a soul that's bearish on energy right now. That should scare the shit out of you if you're long. Maybe it goes higher for a little while. Maybe Russia or all these tensions. Yes, it could go 125. But what happens at 125? All these producers, man, pedal to the metal, flooding the market with as much oil as they can, because they're going to make a fortune. And that's when things balance out. Because now you're going to see a massive amount of supply. Oil is the most cyclical industry in the world. Up, down, up, down, up, down, up, down. I've learned that from my buddy Cactus, who buys it every single time the market crashes. Why? Because he's been doing this for 40 years, and he's seen all of his friends. Almost every one of my friends go bankrupt. Every 10, 12 years, bankrupt, done. Sometimes every 5 or 6 years, done. He goes, that's when I save my money, and that's when I invest the most, when things are really, really shitty, not when they're great. And that's worked for him. Why? Because he almost went bankrupt a couple of times, and he learned from that. So you're looking at oil being one of the most cyclical industries. Not going to go straight up. It's not. But you're going to see tons more supply come to the market, and when it does, that's when you're going to see prices level off and more EVs hit the market, and you're going to see demand tail off as well. As finally we start developing more renewables, which we don't have right now. I wish we had them when we decided to go, zero carbon by whatever year, which is never going to happen. But you guys get the point. You don't want to be in the side that, if you're looking around, everyone's high-fiving each other and everyone's on the same side, worry. That's the best advice I can give you. So any questions for me, comments? I'm here for you, frankcurzioresearch.com. That's frank at curzioresearch.com. say this all the time, and I mean it every time. I really appreciate all the support, guys. Love you. Again, you need anything, give me a holler, give me a shout, my email. And I'll see you guys. When I say you guys, my subscribers, paid subscribers, I'll see you tomorrow, frankly speaking. I'll see you then. Take care.